The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to another beautiful edition of the Power Trading Hour. I can even figure out which one I'm at right now. The Power Trading Hour with your humble, lovable, and squeezable host, David White. It is another gorgeous day at the headquarters of technical trading and investing, TFNN.com. Interesting day out here. Very, very light volume through most of the morning. Just 2.1 billion shares now as we hover just above 1,500 on the S&P cash. But yeah, just 2.15 billion shares as we speak at 2:07 Eastern time. A very, very light volume. Looks like I've got a lot of stocks that are really just gasping for breath. I can't even say it. Breath today. Seeing a lot of stocks that had what looked like blow-off tops, and we're even seeing some equities out here that are suggesting maybe we've got a top in for housing now, along with some of the news. We'll talk about some of that. What else do we have going on? Now, normally I don't recommend watching a lot of financial-tainment shows, CNBC, Bloomberg. I pretty much have it on just so I know what people are talking about. For the most time, I have the audio down. And most of the time, I don't watch it. I fast-forward through it. If there's something really interesting that people might be interested in, we will take a look. I've got to put a little thanks out here. So anyway, we'll be talking about that. But probably, if there was a time to be watching, today was it during the noon hour. Just turned it on, flipped the channel, got ready to eat some lunch, went in, got the wonderful TV dinner out of the microwave, went back to my superior trading desk, started sitting down, eating a little bit of turkey, a little gobble gobble, and looked up, and of course there's Icahn basically yelling and screaming about another big man on the street, Ackerman, and his short on Herbalife, and why Ackerman is the devil incarnate, and Icahn is, of course, the great guy. So pretty soon they both called in. It devolved into a epic proportions of the food fight in Animal House, of both of them calling each other names. I'm not exactly sure what's going on here, but here's my educated guess. Icahn, fresh off of running Netflix to $168, and we'll talk about how he did that in a few minutes. I suspect he's getting ready to use a lot of that cash, maybe to go after Ackerman and his short of Herbalife. It didn't seem like it was really making a big difference in the stock price of Herbalife earlier. Go ahead and check it here. And it's up $1.55, but the scent is in, blood is in the water. He's got over Ackerman's got over $1 billion short on Herbalife, and people have been sniffing around, seeing if they can't run him out of the market. We've seen this happen in Netflix, an engineered short squeeze. There are no, I would say that there's no kind of fundamental numbers that would put Netflix today with forward-looking numbers at $168. What Icahn did was he came in, swooped it up in the mid-50s. Probably also had some short shares in there, bought them all back generally at once to get the market moving. Jesse Livermore called an engineered short squeeze of this advertising. You need to advertise that there's a new bull market. That's exactly what Icahn did. And over the last couple of days, what did he do? My guess is this. that almost all the shares that he had long, and probably people that he knew, he encouraged them to leave them in a margin account. My guess is over the last couple of days, maybe the day before, maybe 2 days before earnings, maybe 3 days before earnings, probably took all of those shares out of a margin account and put them back in a non-lending account, calling for, as they came in, a automatic basically call of those short shares. That's how you actually engineer one of these epic proportion short squeezes. I wasn't involved in it, didn't see it develop. It happened without me. But the postmortem on this is fairly clear. What do you do to do something like this? You set up everything and go, and probably one of the most successful short-term short squeezes engineered by Icahn. I think now that he's had a huge success, everybody's patting him on the back. What is he going to do? He's going to try to do the exact same thing on Herbalife. I think you've got much higher levels to go. But the next thing on Herbalife will be taking shares and actually encouraging people to take shares out of their margin accounts, put them into non-margin accounts, and try to dry up the amount of shorts in Herbalife. I've seen the case. He put out, Ackerman put out a 350 slide deal on why this is actually kind of a Ponzi scheme or a pyramid scheme. I suspect in the end he will be proved right. The question is whether or not all the sharks in the water, as Tom says, the sharks in the water, come after him. But this is very much like we've got gold out here, where a lot of people are going after gold stocks and gold GLD shares in the same thing. But this is a really kind of a 1920s, 30s thing. It's happened in the past, but very much trading places, if you want to think about that, with maybe not the illegalities, because there's really nothing illegal in what these people have done. But probably it will be on CNBC's website. But kind of interesting to see billionaires going at it. Kind of almost like a chick fight. You just you want to look at every other guy out there that may run in there and try to stop it. You don't want to go ahead and grab that guy preemptively before he stops that the cat fight out there, because there's nothing like a good cat fight. You don't see many of them anymore. Women going at it. Oh well. But anyway, great television. I don't know if you can learn anything from it, but I think we can probably learn a little bit more about the Netflix and actually engineering huge short squeezes, and also bear raids. Seeing a lot more of those in the last 6 months in stocks, and really see it to its fruition in Netflix. And being able to make a couple, probably 200% on your money, as Icahn has. The question is now, how do you get out? You've got 200%. Bought it. Let's say he bought it under 60. It's $168 now, so he's made $100 on it. How do you get out? And this is another thing that you need to go back and read your reminiscence of a stock operator on it. You can't sell out while a stock is going up. What you have to do is continue with the good press releases, and over time, slowly, every day, keep selling your shares back into the markets. And probably the easiest thing that Icahn has been able to do over the last couple of days is sell his shares back to these guys that are natural buyers, the shorts. Being short is not a bad deal. You just have to make sure that you're not in a stock that is 27% short like Netflix. But we are seeing some of the titans of Wall Street go after each other, which was a common occurrence back in 1900 to probably 1930. It kind of died off. There were some small instances of it, but for the most part, you didn't see a lot of people actually taking other people out of business and running them into bankruptcy, like you were probably seeing in the last 6-9 months. just a lot more of that old-timey stuff, probably because of the lack of retail investors and the proliferation of hedge funds where people are way out, highly leveraged on one side. The old saying is the best way to avoid a margin call is basically stopping your way out. But we'll continue to look at this market and see how it goes. But if you are a student of history, and you should be, because anybody that doesn't want to repeat history should know it, just keep a good eye out there. I'm sure they'll be playing that, but most people are already saying that it is probably the most weird hour in financial infotainment in years, and probably well worth watching just for the entertainment factor. I don't know if you're going to actually learn a lot, but every once in a while you can. The funny thing is Icahns, who's a pretty horrible guy from all accounts. He's not. He's got his hands caught in the cookie jar more than once, doing some dubiously ethical issues. But for him to come out and tell everybody how horrible short sellers are is rather a laugh, since he's been massively short some stocks, even in the last year, and been very vocal about coming out and talking about people being short these stocks. So I guess the question is whether or not Ackerman, when he came out and made the case on being short Herbalife, is probably his own worst enemy. And when you say that you got $1 billion short of something, you become a fairly easy target for people to work on and against. But keep an eye on that. That is the next chapter of Icahns' massive short squeeze. And I suspect he's probably going to spend some of that money that he did make off of Netflix as soon as he can, and try to go after him. But I think Ackerman's mostly short 60, 65 area. He's been short quite a while. So they'll have to drive this stock before it really starts hurting him at all. And for all I know, he's lightened up that $1 billion quite a bit as Herbalife. What was it? HLB, right? HLF. We continue to go after it. But, you got to see, we don't know when it got down to, $24.24 on December 24th, just how many shares that Ackerman covered and what he has left. He is saying that he bets this company goes to zero over time. A lot of these big hedge funds will sit 2.5 years to get their money out of it. So it's not I think it would be unwise to be on either side of the stock because you never know when all those shares will be short again. For all I know, Icahn is trying to get the company up so he can short it too. It would not be beyond the scope of reason. Give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we're going to go to our first caller today. It's John in Philly. How you doing today, John?
Hey, David, I wish you a good upcoming weekend, sir.
Well, we've got the biggest weekend in Tampa this weekend. It's called Gasparilla. Everybody gets their floats out and makes it look like giant pirate ships and goes through the streets of downtown. Kind of one day of what's the deal in New Orleans? Kind of a...
Mardi Gras.
Yeah, kind of a Mardi Gras. The first 3/4 of it's pretty good and family-oriented. The last fourth is kind of like real Mardi Gras.
That's a little out of hand, eh? Good.
It gets a little out of hand. There's a lot of topless stuff going on down at that last quarter of it. And I went last year. Probably not going to go this year. Anyway,
David,
keep my shirt on. Yes,
buddy.
I know. Yes, I've got problems there anyway. I'd probably blind a lot of people. I haven't been out in the sun a lot. What do you want to look at today, John?
David, I'm very curious about your work. We all can see how the mining equities are getting absolutely crushed. Some mining equities are breaking the new lows. Think Anglo Gold Ashanti. Think IAG. Think Harmony. I'm wondering if any of the equities there in that group are showing any signals that attract your interest according to your tools?
I wasn't, on gold stocks. I don't know. In the olden days, there were a handful of them ones, and I played like BGO, and when was buying it at a quarter, and selling it at $2 and $4, it's almost $6. Those were the early days. Now it almost takes somebody like Tom looking at them full time and understanding the exchange rates and going through them. So I don't spend that much time on a lot of individual stocks. I do have to tell you that I wanted to get short yesterday GLD and missed it. So I suspect that there's going to be quite a deal of additional weakness, and actually I'm a lot more bearish on it than even Tom. I think we could see kind of a flash crash back into 1250 as we do get a lot of people that are way on the wrong side of this trade right now, all trying to go out the exit doors of the theater when everybody's screaming fire, just like we've seen it in Apple this week.
Gotcha.
So
yeah,
I think the problem is over-owned. Everybody believed they had to own it. A lot of parallels like Apple. You've got to own it. I couldn't hear anybody telling me that Apple was going to crack this week. Everybody, it's a good maybe it goes down another $10. I didn't hear a lot of predictions that Netflix was going up $100 and that Apple was going down 250. So in this, I don't see anything. You could get some bounces out of here right now. You called in about Silver Wheaton. This thing is consolidating out. It did do the first thing it was supposed to do correctly. That is that it pierced the low on lighter volume on December 20th, 3.9 million shares compared to the first low on November 16th. What we have now is another lower volume low, but just like Apple, it could, you couldn't really, I don't think, be short going into earnings. As soon as it started weakening, I think you could have, and I think that's it. You're going to find these jumping the creek all one day. Probably going to see either the bond market do something, and or the dollar jump the creek or something, and then we're probably going to see these things really crushed. But I could see gold back down to, probably maybe it goes from like $1,400 to $1,250 in one day, and just absolutely cream everybody out of the market to the point that no one wants to see it at all. And it's maybe the same thing in silver. And that would probably be when you want to own it next. But to me, it just seems like everybody's so certain about owning gold and silver now that it is the parallels to Apple are very, very close. So I would be on the short side of these.
Yeah, David, you do make a good point about that Silver Wheaton pattern coming down here to this 34 range a number of times. It's got the potential to jump the creek to the downside, as you point out. Here's just a follow-up question on that pattern.
Yeah, we'll go. We'll come back from the break and catch you.
Sure, thank you, David.
Anyway, we'll look at this, but I do wanted to talk to him about one thing when we came back, and that is the heavy down legs, and then the next two legs up really didn't show much energy. So we'll talk about that when he comes back, because this is the kind of pattern you get when you do start to gap down or jump the creek, they say.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just one trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, we are talking basically silver, gold, I guess the whole sector out there with John in Philly. How you doing today, John?
Very good, David.
Okay, just made sure you made it through the break there. Anyway, so where were you? What did you want to bring up?
David, I wanted to ask you this, and this has to do with applying your proprietary techniques to the silver Wheaton chart. On the daily chart, of course, silver Wheaton made a high in the September-October timeframe, came down hard in November, and now has gone into a trading range defined by 34 to 37.5. And, of course, we're right there at the bottom now, and it certainly looks poised for a gap and go, a jump the creek downside. But my question is, if this equity finds support in 34, and if it rallies and gets on top of this range, 37.5 on the high side, what would that set up as far as your work is concerned?
Okay. What I really look at, or let's do the long term first, and that is that you had the February 29th high of 2012 in silver Wheaton at $40.36, 11 million shares. You came into it, and the closest you got within a 0.5% of the high was 4.2 million shares. So you had, 40%, 38%, 37%, something like that, of the volume of the high. So you had a clear and unambiguous sell signal. What I would have liked to seen to actually say we were going to come back to this high volume untested low for May 16th in 2012 at 22.94 was less energy up here to the top. What we've done is kind of go sideways, and things change. But one of the reasons I probably didn't go whole hog short was that energy back up wasn't all that bad, back up to the top. So what we're doing, I suspect, is burning a lot of this energy off. But when we go to a little, let's go to just a slightly lower time frame here. You came down on heavy volume for the first leg from 41.30 to the November 16th low. And you had a decent volume in there, 5.5 million shares. But you had signs of weakness. 2 days, the biggest candles in that time frame, both with 7.6 million shares the day before, and then 7.6 million shares. So you had a lot of energy down. That almost always makes stocks do exactly what this is, which is they have kind of an exhaustion move, and then they go sideways for a while. Now the question is, do they start heading back up or heading back down? So the first bounce you have off this, if you're looking, is a 2.5 on my Power Law Vector indicator. I would love to have seen something where the energy actually picked up to the upside, that next leg up to 37.58 on January 2nd. It did not. It was weakened, and that pretty much tells you right there, if you don't, you probably look for some sign of more strength than the first automatic rally, which is that first one off the low. The second one didn't have more energy. So to really make a bullish case for this, you want to see at least some effort to have more energy come to the upside before we come back down, and we've never gotten that. So that's where I'm thinking that you are correct, thinking that we're probably going to have some kind of event, news or news-driven something that's going to make this thing hop the fence and go lower out here and basically jump the ice to the downside, or however you want to do those Wyckoff sayings out there. But to me, the poison pill out here is that weak jump from December 20th at $34.03 to $37.58. It got into that gap down area from about 38 to 37, and that's it. It tried to come back up there yet again 3-4 days ago. You had a nice little what they call railroad track reversals, and I can't get that to look right here, but you had kind of some mini reversals. Sometimes they call them tuning fork tops or railroad tracks, and that's just two candles, one bullish, one bearish, next to each other, or they can alternate, but almost the exact same price range, everything. And then you get to pull back down here. So I'd be watching these. In fact, if I didn't miss it on Wednesday, I would have been short gold then.
David, thanks so much for that detailed review of the volume work. Real helpful, so I appreciate it.
You bet. Well, you have a great and safe weekend up in the chilly north. Anyway, you can give me a call too, 877-927-6648. But just continued lower highs on lower volume. It gets up to that gap. Just really working off that exhaustion move, and that's a lot of times what you're going to get is these moves sideways. One of the ones that I like to point out is, and for the same kind of move, is Apollo. I tried to find it before one time. Maybe I'll have to find it another one, but it's been like a couple of years ago. Let's see what we have out here. Maybe it's even longer than that. Maybe it's 3 years ago now. Maybe I'll find it out here. Okay. The move I'm looking at, let's go back 4 years. For some reason not pulling up the data. But Apollo had a huge move down and went sideways in this $53 range starting on September 23rd, 2010. And this is a good indication where you get heavy volume back down Hopefully everybody can see that. I'll zoom back in here a little bit so maybe everybody can see it on Tiger TV. But this is the same kind of pattern out here that you see. You do get lighter volume lows, and it just keeps moving and burning more energy. But every single time it started, pretty much every single time it came back down, the energy increased as it went sideways. And that is distribution. I suspect that's probably what we're seeing in a lot of these stocks now. And I think that there's a lot of credence to what Tom talked about in a lot of people coming after Paulson and his gold funds and all the shares that he owns in those. He's so big that when you get into those kind of markets, there's just no easy way to get out, short of basically blowing a stock like Silver Wheaton away. I don't know if he's in that specific one, but maybe I'll ask Tom about if he's got anything new since his CNBC interview on that. But I started talking to Tom about just the GLD issues because I'd seen a lot of rumors floating around on them coming after Paulson. Anyway, we've got Max from Houston today. How you doing today, Max?
Taking my call. I was curious about the IYT. Today it's formed a doji candle, and it sure looks like it's exhausted up there. And
Okay.
I just wanted your opinion on to me it appears that it's ready pretty soon to do a pullback.
Okay.
And I was thinking about buying either the 103 or the 104 puts, 2 or 3 months out.
It's IYP?
IYT
Oh, okay.
is the Dow Transports ETF.
There we go. Okay. Well, you're thinking of shorting this, right?
Yes.
Okay. Normally what I look at is I want it to bust on lighter volume. This actually did break the highs on higher volume out here. If you want to go back to the July 7th high on 2011,
Okay.
it had 1 million shares. Basically, we are making highs with high volume up here in a doji. What are you thinking on a pullback? The gap back to 95?
Yeah, I was thinking about 95 or so. Maybe a little bit less.
Yeah, I'm thinking, I would probably find stocks that are up on vapor today. We're probably going to go through a few of those stocks later before the end of the show. But to me, there's one thing that you want, and that is a blowout top. You want huge bars with huge signs of strength, and you want it to go totally exhausted, right? And this still has a kind of a nice trend up. And can this be the end of that trend? Yeah, I just think that there's probably lower hanging fruit out there than the IYT. I hate trading anything around the Dow Jones. I hate trading stocks in the Dow Jones. They're 90% institutionally owned. You are going into fund buying next week. They will just shove more money into these. Even if the market cracks, there's going to be people buying these, not because they want to, just because they have to. So I'm thinking that there's probably, I've seen some, weaker sectors out there, and a lot of them are actually giving huge volume blow-off tops. And I would probably be looking at those before I think maybe we've hit a top here, and I think the doji out here is a good example of this. I just don't think, you're basically looking at a 5% down move, maybe 10%. I just think that there's some stocks out there you could get 15, 20%, or even ETFs out here. But when you look at ones like this, RYL, you're seeing stocks out here that are very tough. I mean, Rylan probably not giving any kind of signal out here that it's topped yet, and some of these others that are just are acting almost exactly like Apple. I mean, they're not really turning around out here. But there's a lot of other stocks that are giving some signs that there just is no volume back up as they go back into these highs. I'm not right now shorting any indexes. I'm only short individual stocks.
Yep, I understand.
Let's look at the energy sector out here.
I was looking at Chevron.
Yeah, to me, if I was going to do an ETF, it would probably be targeted in something like the energy sector, the gold sector, something that is really on a commodity basis. For the same reason that silver is probably going to, and gold is probably going to go lower, we're probably going to see the same pressures, I suspect, in other commodities like crude. So when I look at like the OIH and some of these other ones, I see just, very, very stretched markets out here, very light energy. When you look at like the OIH, the last major high out here had 4.1 million shares. Let's see what I have out here. Just let me look real quick. OIH, well, we got like 4 million shares out here. We're really not pushing these highs or getting these highs with a great deal more energy out here today. But to me, there's a lot of Gartley patterns in that sector. And I'm trying to remember which ones that I put in the newsletter today. I'll probably look at them tonight. I wanted to see how they close out. But there are a lot of those in that energy sector that are making Gartley patterns. Maybe during the break I'll bring a couple of them up that might give you a better feel for going something. Which one were you looking at in the energy?
It's Chevron, CVX.
Yeah, I mean, you've got a nice consolidation pattern. You're up here against that gap. I like this trade a whole lot better than I would the first one you had. This one actually looks pretty good out here. You came down with monstrous volume on the 10th of October on almost 16 million shares. You're up here with half that volume in the 8 million shares. To me, that would look a lot better. Were you looking at options on this one?
Yeah. And in fact, I got the 98.
Okay. I mean, I like that. This is a good-looking trade. 98 what's? February's? March's?
No. This is April.
Okay. I'm just looking them up right here. And you got the 85s?
No. 98.
Oh, excuse me, 98.
Yeah.
Dyslexia 90. Oh, are they weeklies?
No, I think it may be March then.
Well, it'll be on an even strike price. 95s or 98s?
Oh, it's probably 95.
Okay, yeah. So that's not bad. Probably the biggest thing is just the open interest on these things is not really wide. But you're on 95s?
I do believe that they're 95s.
So you're really looking for this thing to blow apart. See, I look at probably the 108 is where this thing wants to go, back to the high volume day of the 21st of December. You'd really have to have a huge move out to get this back. So you're looking at that giant gap out there at 95?
Yeah, that's what I was thinking. It'd probably end up, trying to fill the gap again.
Yeah, now the problem is whether or not it moves fast enough for you to get into that 95. Yeah. As that thing comes down, it's going to melt a lot of those premiums away unless you get a huge gap down, right?
Yeah.
And when you do if you do get a huge gap down, you basically have to sell your options probably into that gap before they melt the new high premiums away on this thing.
Yeah.
I probably would have picked a higher strike price, even though it's more expensive. I mean, if this is right, you can get these things in the 80-cent range for the 105s.
Okay.
Right. So I made
4 months, right?
Yeah. I mean, these things are fairly cheap. But yeah, I mean, good asymmetrical bet. I'll try to look for those things when we go through the break. So look for them on Tiger TV in a minute here.
All right. Thank you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Wanted to look at a couple of these stocks making Gartley patterns. First is the directional daily S&P 500 Bull 3X shares, basically finishing up a bearish butterfly. Target was 102.50. We've got to 102.49. May get a little higher than that, but keep an eye on that. What we have is exactly what you want in a Tiger Gartley, and that is the energy down pretty good. The energy up, not all that much. You basically had 1-2 days of strength out here. Of course, on the first and second and third of, or the second, third of January. Since then, it's kind of stumbled up here. You had a little volume yesterday, sold off to the end of the day. Today, a little gap up. But the SPXL, if you want to look at a nice Gartley with the X point starting out on October 5th, pretty nice one. Hopefully you're watching on Tiger TV. But that's, this is pretty much what you're looking at here for a Tiger Gartley. And if you get light volume today, I don't have the volume for it right now may be interesting. We were talking about a Gartley pattern that I saw today in the oil sector, and the S&P oil and gas ETF XOP is coming in, finding a lot of resistance right at this level, and that's what I was looking at today. Another one where you had a very strong down move and in from the X to A points on the oil and gas sector. We've not had any kind of real move other than that the 2nd of January. Since then, not a whole lot of energy. We are up to that B point, or D point, which is 57.51 for the projection. We've gone over that, but it's closed back below that each time, a high of 58.21. So we're probably going to get an answer, I would suspect, on Monday on whether or not these oil and gas stocks are going higher. I've seen so many of the stocks out here today on very, very light volume. And we were looking at some of those in the housing sectors. I suspect the housing sector pullback is starting. We had fairly weak news in the housing sector, with new housing starts in December down at 7%. A month does not make a market, and of course everybody quickly ignored it like every other bad news item out there. Generally consistent with a bull market, but also maybe one that's a little frothy out there if no one's willing to heed warnings. I actually wrote about that today in my newsletters, and that is how much this market is really starting to remind me of 2000. We have stocks that are based on how many users they have, not how much money they actually produce. That was Facebook this year. We are talking about the customers, not money. And that always makes me nervous, back to the sock days of 2000. Also, the moves on stocks like Netflix, where you can get a huge move out of a stock that I can't find any justification for it other than a monstrous short squeeze in the market and a well-engineered price move in it. But be kind of interesting. Tonight I'm going to be on with Tom O'Brien in the bottom half of the 4 o'clock hour. We're going to be talking probably the State of the Union. Been listening to a lot of the earnings reports this week and what we're looking in these stocks. And we're going to probably go back to the Wayback Machine. September 25th, I released a special report on how all or most of the stocks in the supply line were looking pretty horrible for Apple, and this not much off the high, about $4.95. Released this report on September 25th, and that Friday talked about it, or the next Friday talked about it with Tom O'Brien on the Tech Insider Hour. But we're going to be going into the Wayback Machine, and when I pulled this apart and started seeing the first weakness in Apple, September 25th. We'll be back an hour and 20 minutes.